back and wait through the daylight. Sit back and wait through the daylight. Sit flat on subway grades. Shoot up poor man's ice skate. Fall through the
A couple of times a month, we like to go and reach out and talk to our man Saul Albom. He does great work for us here on America Tonight, digging up a lot of information that you'll find so useful. We're going to start to post it on the website for you, too. So, how is life in Norway?
Kay, it is a beautiful day here. The greens really come out, and the flowers are blooming. You can smell like sweetness in the air, and the foul smell of default is long away from here.
I like the way you put that, my friend. So let's start off with the story everybody's talking about, even if they don't understand it. Facebook. What happened to Facebook when it IPO'd last Friday, from Friday to now?
Well, they screwed it up. The analysts cut their equivalent guidance. And stock, last I checked, was down, 25% from its IPO.
Yeah.
So there's a reason why last time I didn't talk about Facebook going public, Kate. Then there's a reason why I never brought it up in the first place, and that is you don't want to buy what the smartest guys in the world are selling. And those guys are the venture capital and the private equity. And those guys have the inside information on when to get out of Facebook. So they're seeing a what's called a deceleration of earnings and profits, and they want to get out and make their money. So they're getting out at the peak. The second is what happened is Goldman and all these guys got a great deal for Facebook. They got the highest possible price of going public, and everyone else who bought in at the IPO price got smashed. It was, in my opinion, it was overvalued. It was funny. Mrs. Albom asked me if we should have got in on Facebook, and I was, no, I just didn't like the valuation, and we could talk about that more later. And then on a more serious note, the regulatory issues. And this is kind of really complicated and hard to explain for radio, but the bottom line is, when a company makes an announcement, it needs to be able to tell everybody at the same time. It's called Regulation FD, or fair disclosure. It used to be that if you were a public company, you would have a few of the rich boys in the back room. Of course, they'd all be rich white wasps and all in New York. And you would disclose, we're going to have a great quarter, a bad quarter, and and all your little buddies would make a lot of money. Well, Regulation Fair Disclosure came out a while ago, and I said, if you're going to make material news, you have to put it out in a press release. Remember back when we used to work together, the press release racket?
Yes.
From Market News First? Okay, that's a consequence of Regulation FD. So basically, Facebook may have broke the rules along with the investment banks when they all simultaneously lowered their quote-unquote guidance or their earnings, what they thought that Facebook was going to do, and they all lowered it by like 1% exactly, all together, all at once. So something's fishy was going on there. Now, whether it was intended, whether it was a mistake is unknown, but the guys who are now suing them got a huge judgment, $7 billion judgment out of Enron. So, there may be some blood in the water there. So it was just a really messy deal. It looks like amateur hour. They didn't do it right. And then the NASDAQ screwed up on trades. And bottom line for your viewers, why I never talked about it, wasn't because of these issues, was because it was just too darn expensive. Apple's trading for a lot better earnings than Facebook is, even though Facebook has a big opportunity. We can talk about that more later, too, or more if you like.
Yeah, when you say Facebook has a big opportunity, it's all about when you get in, isn't it?
Oh, yeah, absolutely. The money is made when you get in, not so much when you get out. Just like in real estate, sure.
Yeah, so you have to get in at the right time. So you're not saying, hey, never get Facebook, but you just have to wait to see, I guess, even where the price settles, since it's dipped so much.
Yeah. Last I checked, it was, like I said, it was down 25%. It was like $33 a share last I saw. I can punch it up right now. But basically, now it's starting to come back where it would be a fair price. Yeah, $32 even. It debuted at, like, $42 or $45 a share. Basically, what it means is they had $1 billion of earnings, profits, okay? And they were trading, the whole value, the company was valued at $100 billion, which is 100 times earnings. And I sent you this little presentation, Kate. If you compare that to Apple, Apple's trading at 16 times earnings. Now, what does that mean for your listeners? What that means is at current profits, it would take 100 years to get paid back on Facebook. And 13 times. 13 times. Apple's 13 times. So 13 years on Apple. So now, granted, there's going to be growth. There's going to be growth. So maybe in a couple of years, it'll only take 40 years because you're getting more and more profits. But it's really it's a lot. It's a lot to pay for that. 40 times to get a paid back of 100 years or 40 years is not the kind of investment I'd be looking for.
No, I agree with you. We've talked about Japan a lot. What's going on with Japan? You say Japan's going to implode.
Okay, so you remember, Kate, about 2-3 years ago, we started talking about Japan on ATN, right?
Right.
And, well, guess who started talking about Japan in April, just about 30 days ago? Well, Harvard Business School. Harvard, I don't know if your listeners know the way they educate their MBA students, their Masters in Business students, is they do the case study method. Well, they finally got around to it. They must have been listening to America Tonight. They finally got around to it and put together a case study on Japan. All these things that I've been screaming about. And I think I did talk about them a couple months ago, too. Japan, too, when we talked about their 5 foreign ministers in 4 years, or 5 financial ministers in 4 years.
Yeah.
And, Kate, if you got a chance to check out that chart, I can go over just a few of these statistics. God, I sound like a professor already. It's not what I wanted.
Yes, let's look at the chart, everybody. The chart says
on radio, right?
Yes.
Well, I was hoping to get your reaction. Where
reaction. Yeah, where you're talking about comparing it to other countries.
That's right. So if we look on, everyone's complaining about our debt, the United States debt. And we're at congratulations to the listeners out there. By the way, I want to congratulate them again. You guys have now reached 103% of debt to gross domestic product. But you guys are amateurs compared to Greece at about 140, and Japan now at 130% of gross domestic debt to gross domestic product. So we can give them a round of applause. And I'm waiting for your
my studio audience.
Your studio audience.
There you go.
That's the kind of applause I should get every time I come on.
Yeah, right.
Or that's the kind of, actually, everyone listening, that's the kind of applause Kate gets whenever she steps out of the door and whenever she goes to the shopping mall. I mean, it's,
sure.
It's
absolutely.
But go ahead, Kate.
So Japan, so it's interesting. This is all playing out, as you said on the show, like you mentioned a couple of years ago.
Yeah, absolutely. So, and again, the reason why I didn't make a recommendation on it, and we'll get to that in a second, but basically, next chart over, and everyone listening can go to ATN. Kate, you have full permission to distribute this and do whatever you want with it.
I will.
My name, I didn't put my name on it, so you can do whatever.
We'll give you credit. Don't worry.
Okay, very good. So Japan, and we have all the charts here for everyone listening. Go to ATN and check it out. Japan is actually now paying some of the lowest interest rates in the world because their citizens feel a patriotic duty to buy their debt. You know how our debt, we're owned by the Chinese, right?
Right.
And everyone keeps on buying our debt. Well, nobody's buying the Japanese debt. It's about 95% owned by the Japanese public or their banks or their pension funds. So they're allowed to get away with only paying about a 1% to 2% on their debt. It would be like everyone listening had really low interest rate credit cards, okay? Maybe only 5 or 6%, where everyone else is paying 12 or 18 or 24.
Mm-hmm.
Now, imagine, I want everyone else to listen out there, everyone in credit card debt now, it's kind of getting by and doing okay. What if I doubled your interest rate on your credit card debt tomorrow?
Oh, we would revolt. Are you kidding? Saul, stay with us. When we come back on the flip side, we're going to talk a little bit more about that and a few other things, too. Especially, we haven't really said much about Greece. We'll get into that as well. So hang through with us. More with Saul Albom next on America Tonight.